Oh, what's up, guys? It's your boy Looney, and today I want to share one of the most underrated but most powerful investing strategies that I've ever used. It's not flashy, and it's not some new trading hack. It's literally a set and forget it system that quietly builds wealth in the background, even when the market's red. And I'm talking about dollar cost averaging, or DCA, and that is the simple way I invest consistently without stressing about timing or short-term noise. But before we get into this video, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month, and you get access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are in the description. So let's break it down pretty simply, because right now there's news going on every day. We're seeing the government might be opening up. We're seeing that we might be getting stimulus and the interest rates. There's a lot of different market and a lot of noise. But with dollar cost averaging, you don't really need to pay attention to those things, because dollar cost averaging just means you invest a fixed amount of money on a regular schedule, no matter what the market is doing. It could be daily, weekly, or monthly. And you buy when it's high, or you buy when it's low. And over time, your average cost smooths out. And especially if you don't have the capital to do a one-time purchase, this is a good idea. If you like a position, you could do it over a longer duration of time. And the result of doing this is you stop trying to time the market. And instead, you let time in the market do the heavy lifting. So personally, I do it into stocks and I do it into crypto. So for example, Bitcoin, I have a $4 daily buy. It used to be $3, but I sold another altcoin. I think I sold like Litecoin. And then I decided to do more into Bitcoin just because I wanted to get rid of my diversification, or cut down on my diversity with crypto. So I'm not doing huge amounts. This is a very small amount, $4, and it's consistent. It's small buys that add up over months and years. And it's really just about building a position and building that long-term wealth. Now, let's actually look at Hood. Hood is another example of a dollar cost average. It's a stock, and it's a great stock. It's a great company. I like what they're doing. And this is very beginner friendly. I started this year by putting $2 a day, and you can see I'm up 64%, or 194 or 95. And yeah, you can see this doesn't require a lot of capital. This is a very simple strategy, and it's stress-free or emotion-free because it is automatic. So I get it. Everyone loves the idea of buying the dip, but no one actually knows when that dip is. So that's where DCA is effective, and it wins, because when prices drop, you automatically buy more shares or fractional shares because your same dollar amount goes further. But when the prices rise, you do buy less of whatever you're buying of the asset, but you're still participating in a potential further upside. And it seriously takes all the emotion out of it. And you're not just chasing green candles or panic selling on red ones. We can see here, Hood is a very volatile stock. There's obviously bad times to buy and good times to buy, or better times to buy and worse times to buy. There's not really I wouldn't consider that there's bad times to buy, especially if you're doing a long term, but there are better times where the opportunity is a little bit better, or the opportunity costs a little bit better. And with dollar cost averaging, you don't have to worry about that. You don't have to worry about timing it. It is a simple strategy. And yeah, I've been buying all the way since the lows of April till even now. So every dip I participate in. And you're just investing consistently. It's really what you're building. You're building a good habit, and you're just letting volatility do its thing, and it's going to work for you. And it's better that way instead of working against the volatility, because if you do try to time these things, if you did a lump sum and it pulls back the next day, your emotions definitely would be affected by these purchases. But if you dollar cost average, it takes that out of the picture. So even crazy days when the market crashes or crypto dumps, I don't panic. My DCA just quietly keeps buying. And I know the future I will actually be thankful for doing that. And especially even today, right now, after hours, everything's sort of pumping. And instead of FOMOing in, buying all in, and thinking, yeah, basically a FOMO buy, I'm buying small amounts. I'm simply just sticking to my strategy, not worrying about day to day. These are long-term plays. Sure, crypto can go down 30, 50% in one day, which definitely is a concern. But if I'm buying on these dips, then I'll bring my dollar cost average down or my average cost down, and it's a good long-term play. So how I personally do it, again, I do it for stocks. I use automatic investments through Robinhood, and I usually just do the stock Robinhood. That's the only stock. I try to keep it simple. I'm a little over diversified a little bit. I am selling options. You could actually DCA with selling options, and I'm doing it with Webull, for example. I bought it at $11, 100 shares, and I have one at $10 sell put and another one at $9 sell put. So this one's a little bit more active, and you definitely have to pay attention to this, whereas the dollar cost averaging that I was showing before is automatic. This one is definitely more hands-on, but you can dollar cost average even with options. So I'm doing the strategy with not that many different stocks. You don't need to be in every single basket. Keep your eggs in very few baskets. That's really the best way to do it. If you do too many stocks, you kind of lose direction and conviction, and just overall, you become over diversified. And then crypto, same idea. I stick to like 3 to 5, and I do have some other altcoins that I'm dollar cost averaging, not doing as much, but I'm still doing it. And yeah, these auto buy small amounts, they're great. You could set it up to be weekly, daily, monthly, basically whatever you want. And I do it on Bitcoin. I think Bitcoin is a great long-term position. Do I think it's going to double? I don't think this year it's going to double, but I think over 10 years, 5 years, maybe. And that's the beauty of it. It's completely automated. You don't have to stare at charts. You don't have to stress over entries or overthink. And it just works quietly in the background. You don't even realize. Because this pump right now, you can see this 2%. A month ago, this wouldn't be 1,700. This would be maybe 500 or 600. It would definitely be a lot less. But because I'm building those positions and just building up my shares and overall fractional shares, when the market pumps, I'm affected more. It's more aggressive with the dollar amount. And it basically just builds wealth while you get to live your normal life. And the real benefit of this is actually, it's not just the returns. It's the peace of mind. So I don't have to worry about FOMO or missed entries. And I don't stress over the red days. And because I'm consistent and building that habit, my portfolio compounds. It's slowly at first and then grows faster as it grows. And that's why I call it my set it and forget it strategy. It doesn't require luck. It's just time and patience. So yeah, if you're tired of guessing market tops and bottoms, start small and start consistent. Pick a few great stocks or cryptos you believe in, automate your buys, and just let compounding do the heavy lifting. Because in the long run, the investors who win aren't the ones who predict the future. They're the ones that keep showing up, even when it's boring. And if you found this video helpful, drop a like, comment if you're already DCAing, and I'll catch you in the next one. Peace.